So here are two stocks that I'm considering buying for covered call trades. So I already bought AMD last month, but I'm considering buying some more. So I bought it at 23, but as you can see, it shot up to 29. So the ones that I bought at 23 are going to get called away for sure. But this still remains a good covered call trades, because if you look at the option premium, so if I buy this at 29, and if I go out until let's say a month out, so let's say May 3rd, the premiums on it is $2.25. So if I sell an at the money call option, so if I sell at a 29 strike price, collect $2.25 in a month's time, that gives me a return of 225 divided by 29, 7% in 1 month. And if we analyze that, that's 93%. So if I buy AMD at 29 and immediately sell call options at a 29 strike price, expiring May 4th, or May 3rd, sorry, I'd collect about 7.7% return right away. Now, if the stock goes up, then my max profit is 7%. If the stock doesn't move, I made 7% already, and I still own the shares. If the stock goes down, I made my 7%, but I own stock that has dropped a bit in value. And let's say it drops to 28 or 27 or 26. So I'll own stock that has dropped in value, but I already made 7% from it. And the following month, I could make some more returns or some more gains by selling call options again at 29. So of course, if the stock drops to 26, for example, the call premiums at a 29 strike price is not going to be $2.25. It's going to be much lower. So let's say $3 away. If we want to compare right now, if we could look at the 32 strike price, so it'll probably be around $1. So even if the stock drops to 26, I can still collect $1 premium the following month, while making 7.7% the first month, and the second month making $1. Let's say $1 around $29 is 3.4% the second month. So that's really the main reason why I love writing covered calls. Is there's three directions that a stock can go. It can go up, it could move sideways, and it could go down. In all three scenarios, I'm making money. If it goes up, I'm probably not making the most money possible, but I'm still making money. If it's sideways, I'm definitely making money, and more than if I didn't do anything. If it's going down, well, definitely I made a better return than if I didn't do anything. Yes, I'm holding a stock that lost value, but if I still believe in the company, it's not a big deal. I'm going to keep it anyways, and then I can sell call options again the following month, as long as I pick a strike price that I'm comfortable selling my shares at. And if you can average 3% per month, per year, that's 41%. So this is definitely a stock I'm considering buying more of. I'm just disappointed that I bought it at 23 and now it's at 29. It's hard to buy something much higher knowing that you bought it not long ago at 23. But as you can see with the numbers, even if I bought it at 29, it still makes sense. It still generates good numbers. Although it has earnings coming up April 24th, I believe. So for sure, after earnings, there's going to be some hard movement. It could either shoot up or it could drop hard. It could also stay horizontally, but a stock like AMD is most likely going to move hard after earnings in either direction. See, the 1 year target price according to Yahoo Finance is 24, so it seems like it's a bit higher. So I could either wait after earnings to see what happens, because usually after earnings, the premiums will drop in value because there's less volatility in the stock, so the premiums might drop in value. So it's probably best to wait after earnings, or if I want to take the risk, I could buy it now and just accept the consequence. I mean, if it drops, it's going to probably drop to 23, and if it goes up, well, then it goes up, and I would have made my 7% anyways. So the other stock I'm considering is Macy's. So this is a stock that took a big drop probably 2 earnings ago. It's got earnings coming up in the week of May 14. I bought this stock initially at 25.8. I sold call options on it, I believe, 3 months in a row, while keeping the stock every time. The stock went all the way down to 23 actually, but has rallied a bit and now trading at 25.4, so close to my cost and also close to my strike price. My strike price is 26 that I sold my last option at. So this is another one that's interesting. If I want to buy it, if I want to buy more of it at this price, and I go, let's say, a month out, so to May 3rd. So if I buy it at 25.5, I want to buy, and I want to sell at the money, I could collect 95 cents on 25.5. So not as much as AMD, but still respectable. So 95 cents on 25.5, that's 3.7% in 1 month. So annualized, that's 44%. So of course, can't say anything bad about it. And that would still be before earnings. So I could probably get in and out before earnings. So yeah, so these are two stocks that I'm strongly considering buying or buying more of in order to sell call options against them and make between 3 and 7% per month return, as you could see from the numbers I just showed you. If you have any questions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. And it is tax season. If you're looking for an accountant to do your taxes, don't hesitate to message me. Link will be provided below. And don't worry about the deadline. The deadline is if you owe money. So if you expect to get a refund, there isn't really a deadline. But if you expect to owe money and pay something, then the deadline applies to you. All right, thanks for watching.